What's good, everybody? Spektrades back here. In this video, we're going over one of the easiest SMC strategies that requires no daily bias and that works on all markets. Whether you're trading crypto, forex, or futures, this works on all markets out. So before we get into our time frames, I'm just gonna pull that to the side right here. The first thing we have to do is develop our higher time frame bias. We see price creating higher highs and higher lows, and then price started consolidating in this range right here. We see that price right now is in a bullish format. Price is trying to go to the upside, right? That's number one, is to develop a higher time frame bias. What the higher time frame is setting up for us, right? And then for number two, we have to wait for a higher time frame liquidity sweep. As we can see here, price was building up higher highs and higher lows, and then price started building up this internal range liquidity right here. And then we see right here, price came and purged through these old highs right here. So this is our higher time frame liquidity rate. So after we get our higher time frame liquidity sweep for number two, we will scale down to the lower time frames now and look for a lower time frame displacement / a market structure shift or a change of character. As you can see here, price purged through these old highs right here. So we're just gonna scale down to the lower time frames and wait for price to give us a displacement, right, to push price lower. Let's go over the steps once again. For number one, we have to develop our higher time frame bias, right? What is the higher time frame showing us? Price is looking to go up, right? Price is in a uptrend. Price is creating higher highs and higher lows, higher highs and higher lows, higher highs, higher lows. So we can only look for price to push price higher. And then as you can see here, for number two, wait for price to give us a higher time frame liquidity sweep. As you can see here, this was our old higher time frame high. Price came up here and cleared that liquidity, right? So that's number two. We wait for price to clear our higher time frame liquidity, right? So, and then for number three, we'll scale down to the lower time frames and check for a displacement / a market structure shift. So as you can see here, price purged through these old lows and cleared internal range low. So this right here is our market structure shift. And then for number four, we'll look for a fair value gap in premium if we are bearish, or a fair value gap in discount if we are bullish. So as of now, we see that we are looking to go bearish, right? So we will look for a fair value gap in premium. Like I stated in the premium and discount video, the premium zone and discount zone video. So as you can see here, we're just gonna grab align it with the high of the range, of the new range, as you can see, from this high right here to this low right here. So align it with the high and the low. And then so now we'll wait for price to pull back into premium, right? Pull back into premium before we go to the downside. So boom, as you can see, let me just remove everything. So now in premium zone, we can see that we have a fair value gap right here. And just like I stated in the fair value gap video that I released last week, the fair value gaps are like the magnets of the markets, right? So price will pull back into this fair value gap, right? Pull back into it before shorting and going lower, right? So after price has given us this liquidity sweep in this displacement right here, price has now changed character, right? Price was once in a bullish format, but now price wants to go bearish, as you can see. After this market structure shift, price will just give us a pullback, tap into our fair value gap, possibly a order block right above the fair value gap also, and then we're just going to be attacking lower prices. And then for our last step is that we can wait for lower time frame confirmation to minimize our risk in our entry. So as you can see here, as price is pulling back to our zone right here, to our fair value gap, you can see that price comes back up, clear our inducement highs right here, and then tap into our fair value gap before pushing price lower right here, right? And then it's the same pattern that's going to occur again, right? A liquidity sweep and a market structure shift. And now you're going to be confident, right, to now attack these old lows right here. So how can you enter right here, right? It's two ways we can enter. You can either enter at this fair value gap here with your stop loss at the low, with your stop loss at the high, at the open of the fair value gap, or the 50% of the fair value gap. That works also good also in the higher time frames. Now your stop loss is at the high where you're targeting, right? First, you're going to be targeting internal range lows right here. Internal range low is going to get targeted. And for your second entry, if you miss this one right here, after price taps into our fair value gap and gives us a second displacement, as you see here, a second liquidity sweep and a displacement going to happen. And then before price push price all the way back down, right, we're just going to pull back a bit higher right here. Price will show us the same pattern again. Give us pull back, tap into this breaker right here, this lower time frame breaker, to then push price lower right here. So this is where you're going to enter your second entry. Where your stop loss right at the high, and where you're targeting right down here for a 2 trade profit right here. Boom. So the first trade is 125 and then 124. So a 129 in total, right? So as you can see here, this is one of the easiest strategies, right? One of the easiest strategies. First, we have to develop our higher time frame bias. What trend is the higher time frame on, right? And then for the second step is that we have to wait for a higher time frame liquidity sweep. So for the second step, we'll wait for a higher time frame liquidity sweep. Then for the third step, we'll check the lower time frames for a displacement or a market structure shift, or a change of character. And then for the fourth step, we will look for a fair value gap in premium if we are bearish, or in discount if we are bullish. And then for the fifth step is that we can wait for lower time frame confirmation to minimize risk in our entry. So right here, as you can see, for the time frames, just go with them, just like it stated right here. A lot of traders know this right here, but if you're not acclimated to this yet, I'm just gonna briefly go over this. For the weekly time frame, right? For anybody that wants to swing trade, as you can see, the swing traders, I would say, is right here, right? For the swing traders, they're right here from the weekly to the 1 hour, right? So if you are a super swing trader and you don't like being on the charts at all, I would say, so just do your top net analysis for the weekly, and then your lower time frame is gonna be your 4 hour. So you will wait for a weekly liquidity sweep to happen, and then you will wait for price to pull back into a 4 hour fair value gap for you to place your trade to attack a weekly low, I would say, right? So that's for advanced, that's for super swing traders, right? And then for the daily, I'll be going over a daily example also right after this. So for the daily, you will wait for a daily liquidity sweep, and then you will scale down to the 1 hour and wait for a 1 hour market structure shift and a fair value gap to be present. And then for price to pull back to that 1 hour fair value gap with your stop loss at the high to go attack the old low. And then for the day traders and scalpers, your higher time frame will be the H4, so a H4 liquidity sweep, and then you will scale down to the 15 minutes and wait for a 15-minute market structure shift and a fair value gap. And then for the scalpers, right, our higher time frames, right, like for me personally, my higher time frame is the 1 hour. I usually wait for a 1 hour liquidity sweep and then scale down to the 5 minutes, right, and then look for my lower time frame entry pattern to show, so I can scale in. And then for just scalpers, quick scalpers, I would say, that just get in and get out, just quick session traders, I would say the 15 minutes in the M1, right? So your 15 minutes, so you're looking for a 15-minute liquidity sweep in a M1, right? M1 or M5, right? Market structure shift, right? For price to pull back into a fair value gap to attack lower prices. So right here is the strategy. Right here is the schematic of how it would look, and right here is the time frames, everything that you need, right? So let's hop on the charts and see exactly how we can execute this strategy. So as you can see, I'm currently on USD JPY on the higher time frames. So first and foremost, we have to understand the higher time frame bias. What type of trend are we currently in? So as you can see, price is breaking old highs right here, right? Price is purging through these old highs and giving us firm body breakup structures, as you can see. So price is giving us firm body breakup structures, creating higher lows and higher highs, right? Just like I told y'all, when we were creating higher lows and higher highs, price is looking to go bullish, as you can see here. So on the daily, what we'll be looking for price to give us a daily liquidity sweep, right? So as you can see, our daily liquidity sweep, after we had found out our higher time frame bias, boom, price came in purge through these old lows right here. Purge through these old lows. This is our liquidity sweep, and now we'll scale down to the 1 hour. Just like I told y'all, if we were on the daily, we'll use the 1 hour as our lower time frame to execute, right? Since this is a swing trade, so let's scale down to the 1 hour. And then in the 1 hour, what I told y'all to look for is to look for a displacement on the lower time frame, right? So as we can see here, price came and purged through these daily lows right here, and then we're looking for a displacement. A displacement is just a energetic move. As you can see, price purged through these old lows and gave us a energetic move to the upside. So right here is our displacement, boom, and then price gave us a market structure shift. Price cleared internal range highs, changing character, right? Price was once in a bearish format down here, right? Price was pushing price lower, but now we got this market structure shift. Price now is looking to go bullish now, boom. So price cleared liquidity, market structure shift, and then what we're looking for price to pull back into a fair value gap. What fair value gap can we see here, right? This fair value gap, we use this fair value gap, this fair value gap. It's multiple fair value gaps, right? Which one do you pick, right? We'll pick the one that is closest to the liquidity sweep and the one that is a part of the displacement. So as you can see here, this big fair value gap right here, right? This huge fair value gap, and we have inducement liquidity right above it. So right here, this right here is aligning perfectly with our strategy, isn't it? So as you can see, we developed our higher time frame bias. Price is still looking to go bullish. It's creating we got a bullish breaker structure right here, breaking old highs. So price is looking to go bullish still. And then as you can see here, price broke our daily low, and then price gave us a market structure shift, just like we stated. And then what we can see after our displacement, we see that price gave us our fair value gap. So we're just gonna name that right there, fair value gap. Fair value gap. And then, so what we were looking for price to pull into our fair value gap, and then to continue our higher time frame movement right here. So as just like I stated, you can just place your trade. If you are a swing trader, place your trade stop loss right underneath this old low right here, boom. Stop loss right underneath the low. Maybe a person, what about this beautiful bullish engulfing order block right here, right? What about this beautiful engulfing order block? Well, as you can see, this fair value gap is also aligned with this breaker, right? That's what makes this super powerful, right? This fair value gap aligns with this breaker. That's what makes this strategy super powerful. As you can see, liquidity sweep, there's a breaker right here that aligns with this fair value gap. So when this liquidity sweep happens and price breaks through this old high, there's a breaker block that is aligned with this fair value gap. So price don't need to come all the way down here. It just needs to tap into this fair value gap, right? The volume is in this fair value gap. So price just needs to refill this fair value gap to continue our bullish price movement. And then so this now has become our strong low, and now this is our weak high right here, right? So now buy side liquidity is hiding above here. So now let's play price and see exactly what we're looking for. So right here is a higher time frame, 1, 2, 3. Now let's play price and see exactly what we're looking for, right? And then as we can see here, right, while price was playing, price engineered liquidity right here, right? Engineered these relative equal highs. All of this right here is what we call engineered liquidity, right? Price plays these equal highs right here to trick traders, right? They're a place here to trick traders, right, into thinking that price is strong. Now, as you can see here, after price did this relative equal high right, it gives this strong displacement, right? So now a lot of sellers now are hiding their stop losses above here, right? Because they think that price is ready to sell now, to come purge through all of these old lows, right? But we already stated that price took liquidity and give us a market structure shift. This is our strong low and this is our weak high. Now on the 1 hour, we're just gonna trust our trade. Since this is a swing trade, right, this is gonna take probably a couple days, I would say, but we can just set it and forget it, right? Place your entry, your stop loss, your take profit, and you just forget all about it. That's what makes swing trading super fire, I would say, right? You just set it and forget it. And then as you can see here, exactly as we stated, liquidity sweep, market structure shift, we picked the right fair value gap. This is a fair value gap. This is also a fair value gap, but we know which fair value gaps to pick from. Then we place our entry, our stop loss at the correct spot, and then we place our take profit for a 1, 2, 3. What does price come and do? Tap into the fair value gap, just like we stated, to come and clear our old high. So this is an example for a swing format. Now let's look at an example for a day trade / scalping format. And now for gold, as you can see here on the 1 hour, price looks like it's been creating lower highs and lower lows, pushing price to go lower. And then we have to look at our current trend. So for our current trend, as you can see, price has just been creating in this consolidation zone right here, an hourly liquidity sweep. So what do we have here? We just have our hourly liquidity sweep. This is our liquidity sweep. And then after we have gotten our hourly liquidity sweep, what do we wait for? We wait for a market structure shift. Price came close, right, to purging through our old low, but give us a failure swing. It failed to push price lower, but this is also engineered. This is just engineered liquidity. Also, price may later in the future come purge through these old lows, right? But for now, as you can see, price gave us a liquidity sweep. This is one of our patterns, right? Price gave us a liquidity sweep and then came back and then gave us a failure swing. So this right here has become our mitigation block. This order block was supposed to come and push price lower, purge lows. This would have been a breaker block, but since price was just coming back down to mitigate this order block, this right here, this order block that got purged through, has become our mitigation block. Boom. I also have a in-depth mitigation class in the Patreon that I created. That's where I go in depth on just what is mitigation block and how we properly use it. So if you guys are interested in that, make sure to check out the first link in the description for the Patreon, where I have in-depth classes on all topics. And then as you can see here, right, so price failed to push price lower, give us a liquidity sweep, give us a displacement. So now we are kind of seeing our pattern occur right in front of us, right? So we see our higher time frame liquidity sweep. So this was our 1 hour liquidity sweep, and then we have our 5-minute lower time frame displacement. Boom. This is our market structure shift. And then after this market structure shift, what do we look for? We're looking for a fair value gap where price may pull into. So as you can see here, we have our fair value gap right here, and it's aligned with our broken high right here, our mitigation block. So we're just gonna place our entry. Our entry is gonna be right at the open of the fair value gap, and stop loss right at this low right here, right at this old low. Or you can place it at these old lows also, right? But right here is perfectly fine. And where we are attacking the top of this old range right here, external range liquidity. So everything in here is internal range liquidity. Now is external range liquidity. Price purge sell side, and now price is looking to go and purge buy side liquidity right here. So boom, we're just gonna place our stop loss at the low, entry right here for a quick 1, 2, 3 on the lower time frames. Now let's play price. Price came in, tap into our fair value gap, came back in and tag us even deeper, but we are still safe, right? Our stop loss is still at the old low. Back and replay inside of our range again, then to come and push price higher to come and clear these old highs right here. Boom. 2 solid trade examples, one for swing trading and one for day trading and or scalping. If you guys want to join me daily every morning for the live trading, make sure to check out the first link in the description for the Patreon, where we have the mastery hub right here, where it's $30 a month, where you get access to the 15 minutes, the 5 minutes, the 3 minutes, and the 1 minute strategy, and the techniques to master SMC and the market maker X models, and access to private mentorship lessons in all the trading models, plus the beginner to advanced mastery lessons, and access to live trading on NAS100, GBP/USD, and gold, and access to weekly Q&A Zoom calls, and access to daily pre-market and post-market analysis, and access to psychology and risk management lessons, and also exclusive community access. Make sure to check out the first link in the description for the Patreon, which has the Spektrades mastery hub right here, where you can join us every single day to live trade, also, right, where you can join the team. And also right here we do have the lower version for the mastery hub, and it's just the scalping mastery, where I give you guys full access to the 5, the 3 minutes, and the 1 minute scalping models course, and access to the full pre-market analysis, and access to the full post-market analysis, and access to trade breakdowns from models in a private community for all members. So make sure to check out the first link in the description to join the Patreon. If you guys enjoyed this video, make sure to leave a like, subscribe, and comment down below. Spektrades out.